given the data that we have, we've kind of modeled out where Bitcoin would potentially go based on, new money coming in, money that's already come in, consolidation that's happening right now and has been happening. I've never put a price target on Bitcoin before, but I am today. I'm going to say that, Bitcoin's going to hit 500,000.
Ooh.
And that's the number it has to hit just to soak up the demand that's happening right now in the markets.
This is the Valkyrie podcast with Leah and Steven. To find out more, go to valkyriefund.io. Hi, everybody. This is the Valkyrie, and good morning from Asia. Hi, Steven.
Hey, Leah. Good afternoon from the U.S.
Nice. By the way, your hat's pretty cool.
Oh, thank you very much. I earned this hat. But I'm wearing it for the Bitcoin all-time high.
Yes, and that's going to be a big story we talk about today, given Bitcoin smashed past 20K. Smashed past. What were you doing when you got the alert?
That's hard to say. I don't remember. I was probably just reading news on my phone.
Nice. I was playing trivia with a bunch of Bitcoiners, and we then lost every question afterwards because we got too excited and we're stuck on our phones with Kraken and Bitfinex and playing around. So, but I'm really bad at trivia anyways, but I'll admit to that. Okay, so let's start with the stories. So yesterday, the S&P pushed higher. It looks as if the NASDAQ 100 also outperformed. Treasuries fell, given the Fed made no changes to the composition of the bond purchases. Seems as if some traders were a little disappointed in that. And again, the big story that we're going to focus on today is Bitcoin. Bitcoin breaching 20K, why it happened, soared to 21K, actually 21.5 when I woke up this morning here in Singapore. And one other thing Steven doesn't know that I want to talk about is that yesterday, Vietnam was designated a currency manipulator by the US Treasury. And we like talking about fiats. We also like talking about Asian emerging markets. So I may throw something Steven's way there. But Steven, I'm going to let you jump right in. A lot is happening. What is interesting you? Are you interested by the Bitcoin news the most yesterday? I'm totally going to ask you your price prediction, but I'll save myself for that one.
Well, you actually said something pretty interesting, Leah, and you talked about Vietnam being a currency manipulator. Vietnam, from memory, their GDP is right around $300 billion. Which isn't a whole lot. What's more interesting is I was just reviewing the Fed's balance sheet versus the Japanese central bank's balance sheet this morning. And what I realized was the US has added, they've increased their balance sheet by almost double in 1 year, whereas Japan has only added about 30%. So as far as currency manipulation goes, if all things being equal, it does sound like we have a bigger currency manipulator in our midst.
Interesting and notorious.
But let's talk about Bitcoin.
But no, keep going. So what was interesting, and also in your perspective, we do have institutional players in a lot of exciting news on that front. Obviously, that's also what we do. But what do you think finally spurred this rally?
I think it's really been a rally in the making for the last 6 months. Bitcoin doubled, floated around the $19,000 to $20,000 mark for a little bit, and really there was a lot of consolidation happening in that period, and that consolidation was taking the form of large investors putting money in. Michael Saylor is probably one of the bigger names, or has gotten a lot of headlines for doing so, putting his balance sheet of micro strategies into Bitcoin, which is a massive feat. And then in addition to that, raising more money on convertible debt to buy even more Bitcoin. It's one of those brilliant moves I've ever seen. And then you have a lot of asset managers. You have an insurance company that's come in. The insurance company is actually quite interesting because, I'll speak to life insurance company management for just a moment. The way that life insurance companies work, they're governed by the state insurance boards and not by federal regulators. So usually the states follow a guideline called the NAIC, which is which sort of like the way that bonds have assigned ratings. The NAIC assigns ratings to various types of assets and securities that are held on the general account of life insurance companies. So Bitcoin would probably come with an NAIC 6 rating. And to put that into perspective, it's the same rating that you would get for, say, private equity investments, the lowest quality bonds, the lowest quality junk bonds, and then other types of risky assets. And an NAIC 6 means that if you hold those assets on your balance sheet, you essentially have to hold a 30% capital reserve against that asset. So if you were to hold, say, $10 million worth of Bitcoin, you would have to have $3 million in free cash available on your balance sheet to hold against any losses. So that means that the total bet that they have in Bitcoin is you actually have to calculate it as an additional 30% of capital reserves that they're holding against it. So their bet is, if you're holding 30% capital against it, then they're making a massive bet in the valuation of Bitcoin and the eventual price rise. So what that means is, insurance companies are looking at potential price increases, asset managers, given the data that we have, we've kind of modeled out where Bitcoin would potentially go based on, new money coming in, money that's already come in, consolidation that's happening right now and has been happening. I've never put a price target on Bitcoin before, but I am today. I'm going to say that, Bitcoin's going to hit 500,000.
Ooh.
And that's the number it has to hit just to soak up the demand that's happening right now in the markets.
I don't dislike that statement. And you're even more bullish than Scott, your former boss.
What was Scott's number?
400.
Okay.
I like it. All right, I'm going to ask you some follow-up questions. So typically TA traders, technical analysis traders, have ruled Bitcoin, but it does seem as if we have more fundamentals to analyze now. Now, lovingly, Bitcoin is not a company, does not have shareholders, and therefore, and is also not a security, is very interesting to believe that there are fundamentals to analyze. And that's always been a point of contention in the Bitcoin trading world. But you're providing a lot of interesting inputs. And to go back to what we talked about last week and your inflation concerns, would you even consider the macroeconomic environment, and especially with fiat currencies around the world, as potentially an element that we can analyze Bitcoin and make these price predictions? Is that an element of your 500K?
Yeah, absolutely. I mean, yeah, you just have to look from a macro perspective, the demand that exists today, the demand that you expect to exist. Even if it's, MassMutual is a good example. The amount of money that MassMutual has come in for, it's actually pretty tiny compared to the rest of their balance sheet. It's in some terms, not significant at all. But if you really want to focus on, other companies like MassMutual, other insurance companies, pension funds, that could possibly, I think pension funds are a little bit harder. There's other ways that they're going to get access, and that's probably going to be through, venture funds that invest in Bitcoin and blockchain related projects. And I'll explain a little bit why on that later. But yeah, just for a lot of these companies and asset managers, and based on the indications of interest of just dipping their toe in the water, that's really how you derive that number. Now, to the problem of so life insurance or other insurance companies for that matter, there's probably a much better chance of them coming in than pensions. The way that pensions work is, a pension fund is a lot like politics in the U.S. The job of a politician is to keep his job. The job of a pension manager is to keep his job. They're governed by ERISA. They're looked at very critically by pension holders, by politicians, by any kind of stakeholder whatsoever. So if anything, pension managers' job is to not make a mistake. They'll always invest in the largest, most boring managers, because you can't lose your job by investing in PIMCO. They're going to invest in the largest, most boring asset classes. They don't want a lot of volatility. So Bitcoin is going to be a bit of a stretch for a while in that world. Even with some municipalities, for instance, really hurting. I don't know if you've read the news for a lot of, there's a lot of unfunded pension obligations at the moment, and municipalities are looking at ways to try to fund those, and they already have stretched budgets. There's cities and municipalities right now that are issuing pension obligation bonds, where they're hoping to pay a smaller interest rate on those bonds and let their pension managers earn a greater rate. Well, we don't know if that's going to happen, right? I mean, pensions generally have to earn 6 to 8%, and they're not doing it. That's why they have unfunded obligations. So when you already have unfunded obligations and you throw a Hail Mary by investing in something like Bitcoin, it's actually not that practical from the manager standpoint. It's much easier for pension funds to invest in Bitcoin when they're meeting their obligations. So you might find smaller, stronger pension funds that haven't been hit as much as some of the places on the coast, for instance, that are going to be more likely to invest in Bitcoin or digital assets or even private equity that's investing in those types of things.
Interesting. And as a follow-up, when we're talking about investing in Bitcoin, obviously there's a lot of different opportunities and avenues. So from your perspective, how should an institutional money manager invest in Bitcoin or think about investing in Bitcoin? And what I mean is, what's their thought process when determining physical Bitcoin, futures, securities, other derivatives? We have Tudor with futures, Saylor physical, Guggenheim is talking about Grayscale's GBTC as security. How should they think about it?
Yeah. Well, look, if I was managing a mutual fund and investing in Bitcoin, the way that I would do it through the mutual fund is I would invest in a vehicle that already exists, like the Grayscale product, for instance. That's the safest way. You can it's easiest to explain to your shareholders. It's easiest from a disclosure perspective, on your mutual fund itself. It's no different than investing in a stock, right? When you start investing in physical Bitcoin or even a private fund through, say, a mutual fund vehicle, you have more disclosures. You have you have a lot more to explain. It's just harder mechanically to do, and it's not worth your time, right? There's also risk management in place in mutual funds where you're not going to invest 5 to 10% of your portfolio in a product that holds Bitcoin. You might invest 5 to 25 basis points. So for an investment that small, from a risk management perspective, it's not worth your time from a disclosure perspective just to add it to your books. So those types of vehicles are going to make a lot more sense. Now you can go through a private fund now. So if you get away from, say, mutual funds and you're a financial advisor, private funds make a lot of sense. Private funds like hedge funds or even private single asset type funds. It makes a lot of sense to invest that way. Same thing with insurance companies, pensions. They're going to be investing in vehicles that they know. There's just way too much risk in holding physical Bitcoin. You have to track it. You have to, the operations for these institutional investors aren't set up for somebody to be, trading Bitcoin and then following up on all the documents that you need to report it to your investors and report it to your stakeholders. It's just much simpler to go with another manager and pay their fees as you go in. So, the format that say insurance companies and pensions are going to know the best are probably going to be through private funds managed by another manager. It's rare that the pension and insurance companies just have their own internal team that are buying these things themselves. They always go through third parties.
Makes sense. Now, the products vary in their tax structures, though, to my understanding. So do you think that some are more beneficial than others? We were talking about in our podcast last week that Bitwise's recent crypto index fund does not have a beneficial tax structure for investors. And I'm fairly certain institutional money managers would be very aware of which ones they're choosing to make sure that they choose the right one.
Yeah, that's exactly right. So, it depends on which category of managers you're talking about. If you're a mutual fund or if you're a financial advisor buying on behalf of your clients or, any other type of asset manager type situation, you're not going to want to own that because, K1s, number one, is bad income in a mutual fund or ETF type structure. So you don't want any K1s when you're reporting. You can only have a certain amount of what we consider, in that world, bad income. And same thing with if you're a financial advisor buying on behalf of clients, you want to have a very limited number of K1s that you're dealing with on behalf of your client. Now, when you get into the world of insurance and pensions, K1s aren't necessarily a bad thing. They're not the ideal scenario, but they are used to investing in vehicles that produce K1s. So less ideal, but not favorable.
Makes sense. That makes sense. Now, one question is, many of these institutions have had strict mandates against investing in crypto. Do you think that this new surge could be that these securities are able to bypass some of these mandates, of which case maybe it was the scary word crypto, but these are, as you said, common securities and common vehicles that they're used to, and maybe there's a new understanding that this is what we're used to seeing. It's just holding a different alternative investment product. What are your thoughts?
Yeah, the thing that you have to remember, and several of the large wirehouses or the large shops that have armies of financial advisors have a hold on either talking about or buying or investing on behalf of your clients or even directing your clients towards crypto. Some of them, as a matter of fact, even won't let you onboard a client if they made their money from investing in Bitcoin. And two of the largest shops out there, out of the top four, I know for a fact, have that mandate. Now, what happens though is all the large, Wall Street wirehouses, at the end of the day, they are for-profit businesses and they are service industry. And if their clients aren't getting what they want, they leave. And if clients can't get what they want, they won't come. So a lot of the business is driven by client demand, and we're seeing a lot of that demand happen now. There are wirehouses that are looking for opportunities to invest in Bitcoin and other cryptocurrencies. So, and then there's others that are adamantly against it, but it won't be long before they're swayed. If they lose enough clients, what happens is you lose a few clients, or clients start going elsewhere to make that trade. Your advisors might start leaving to go to places that are more friendly to the investments that their clients want. And that's really where it starts hitting, and policies begin to change.
That makes sense. That makes sense. All right, I'm going to ask a provocative final question, which is, do you think that investors are going to start being more interested in the other alternative currencies? CME is about to launch their ETH product. 3IQ in Canada has. There's a lot more potential other cryptocurrency vehicles that will also come out. Or will Bitcoin stay the king? We go to 500K and the rest of the products go a lot far down. What are your thoughts?
So, we have this term that we use in the blockchain world, and it's Bitcoin maximalist. And I don't want to necessarily peg myself as a Bitcoin maximalist, but what I'm going to say is going to sound a lot like it. Unfortunately, when people start getting, they start learning about Bitcoin, buying Bitcoin, investing in Bitcoin, and then they're like, well, what else can I do? It's sort of like, investing in Tesla and getting a 10x, and then all of a sudden like, okay, what other startup electric car companies out there that might fail that I can make a quick 100x in, right? And we have the saying that pigs get slaughtered. So I think, unfortunately, there's a lot of other cryptocurrencies out there that don't have the same benefits that Bitcoin do, the same features, and people that don't quite understand them, they just see them as, oh, well, here's a smaller one, here's a small cap crypto that I'm going to buy and hopefully, make a lot of money in, maybe it's the next Bitcoin, and without doing a whole lot of research. That's sort of the unfortunate situation for, the retail audience. But I think with the institutional audience, a lot of these shops and a lot of these investors have been researching Bitcoin for years, right? And they're finally moving in after years of research, if not, in some cases, a decade, right? Like, I started looking at Bitcoin in 2009, and it takes a lot of time, and I think, and hopefully the same amount of diligence is put into some of these other cryptocurrencies. I think, unfortunately, there's some out there that are that don't have the scarcity value that Bitcoin has. They really aren't built for use as a cryptocurrency. Leah, you and I have written about Ethereum as a good example of something that, it's a great blockchain. There's a lot of really, great things being built on it, but it's not really a cryptocurrency meant for transactional use. Now, people use it for that, and they can, but really it's meant to be the cost of pushing data on applications that are built on that blockchain. And as any other technology works, the cost of those services have to go down in order for the technology itself to thrive. So there's sort of a double-edged sword with something, with protocols, right? Like Ethereum. There are protocols that have overcome some of the issues and obstacles that Ethereum has. So that's something that's really important to note. And then there's also other things that are that don't have a scarcity value at all, that have very little governance, that are not decentralized like Ripple, which is something that, has a lot of fanfare, has a lot of, excitement, but it's really not a cryptocurrency in the sense that Bitcoin is. It's more like, it probably has more correlation to, the US dollar than anything else. There's a central organization that can just print as many ripples as you want. And, you need more ripples, here you go. And, it's not something that I've ever, owned or invested in. And I hope others, don't see that in the same light that, Ripple does have a purpose, but it's not the same thing as Bitcoin.
All right. Well, thank you so much, Stephen. And until next time.
Until next time, thank you.
Thanks for listening. Drop us a line and say hello on Twitter or LinkedIn. Have a great day. To find out more, go to valkyriefund.io.
So Bitcoin, one of my favorite Dr. Dre songs has the line "G's up, hoes down." Today it was Bitcoin up, dollars down.
Oh, boy.
Do we have to cut that?
No, no, we're 100% not cutting that. That's great. And I hope you sing ZZ Top or Dropkick Murphys.
Oh, I'm going to have to go with ZZ Top, but I'm a huge fan of Dropkick Murphys.
That was a good one then.
Do you want to hear a great story about the Dropkick Murphys?
Yes.
You know why they made it big?
No.
They were this little, Irish punk garage band playing at bars in Boston. And one of the players for the Boston Red Sox used one of their songs as his walk-up song in 2007. And then, of course, that was the year that Boston made it to the World Series. So everybody's searching up, wait, what is this band? And yeah, that's how they kind of hit the national stage. 2007. Everybody heard about the Dropkick Murphys because of the Boston Red Sox.
My gosh. What would your walking up to the plate song be?
Ooh. I don't know. That's a tough one. Probably The Joker by Steve Miller.
Oh, that's a great song. That's a great song. All right, that works. Bye, Stephen.
So my buddy who actually told me that story, and I'll shout out to Royce Clayton right now because he played for the Red Sox in 2007. His walk-up song, because he's originally an LA guy, was "Californian Love."
Oh.
And what's really cool about Royce is he actually had a company that was creating custom walk-up songs for baseball players.
We're in the wrong field.
Yeah, we're doing the wrong thing.
We'll learn. This is not financial or legal advice. Always do your own research.